Hello and welcome to this pre-recorded webinar on becoming a homeowner with co-ownership. I'm Niall, and over the next few minutes, I'm going to be telling you all about our organisation and how co-ownership may be a really good option for you to purchase a home in Northern Ireland. First of all, a little bit about us. Co-ownership is a housing association, and we are a not-for-profit. So we're actually a registered charity. We were founded in 1978, and we're the regional provider for shared ownership in Northern Ireland. We've helped over 33,000 people into home ownership since 1978. And in the last financial year alone, we supported 771 customers towards buying their home. That represents around 7% of the first-time buyer market in Northern Ireland. So we help an awful lot of people to become homeowners, which is really what we set out to try and do. In terms of who we help, broadly, there are two groups of people who co-ownership support. There are those people who don't have enough affordability to be able to get a full mortgage to buy a suitable home. And there are those people who have no deposit or too little of a deposit to be able to apply for a mortgage, or it could be a combination of those two things. Nearly half of our customers come to us from the private rented sector, and over 90% of our customers are first-time buyers. So broadly, that would be typically what our customers tend to look like on paper. In terms of how co-ownership works, there are some important things to understand. It's a very simple process. Co-ownership is what's known as an equity sharing product. And what that basically means is that our customers purchase a share of equity in a home, and we purchase the remaining share. Our customers can purchase anywhere from 50% as a minimum up to 90% as a maximum share of equity in the home of their choice. We purchase the remaining share of equity, and the idea is very simple. Our customers pay a mortgage on the share of the property that they own, and they pay a rent to us on the share that we own. The idea is that it reduces the costs for our customers, but they still have the benefit of being homeowners. With co-ownership, we can purchase a broad range of properties. Essentially, we can buy new build and existing homes or apartments anywhere at all in Northern Ireland. Currently, we can purchase homes up to a maximum value of £195,000. We won't purchase homes that require a lot of work. So essentially, if a home is inspected by our surveyor and they feel that it would require more than £6,000 worth of major works, things, for example, like a rewire or a damp-proof course being replaced, we wouldn't purchase properties that require that level of work. That's really just to ensure that our customers are able to move in to the homes that we buy with them and enjoy them from the get-go without having to undertake any expensive or inconvenient work to the property. In terms of the application process for co-ownership, we offer an online application process. There is a separate webinar which goes through the application process in a little bit more detail. But essentially, our customers can log on to our application portal. They pay an application fee of £100 for us to assess their circumstances. And if they are suitable for co-ownership, we will issue them with an approval, which is valid for 4 months. They can then house hunt to find a property that they'd like us to buy with them and pay a second fee, which is £550 for us to assess the property and also to cover the majority of their legal conveyancing costs. Once they have had a property inspected and approved, we will issue them with a full offer, at which point they can apply for their mortgage and their solicitor can undertake the legal conveyancing work, and then they'll move on to hopefully completion. There are, of course, a lot of eligibility criteria with co-ownership. Just like a mortgage lender, we need to make sure that we're helping the right people. and supporting the right people into home ownership. We have a full list of published criteria on our website, but some of the headlines, some of the main criteria are on the slide in front of you now. The first thing, of course, is our application fee, which is £650 in total, collected in two parts: a £100 assessment fee, which is non-refundable, and a £550 property fee, which may be refundable either in full or in part, depending on what stage of the application process you get to. Couples must apply jointly when wanting to live in a property that's purchased through co-ownership. With employment, we will take into consideration all types of employment, from temporary to fixed term. We will also support people who are self-employed as well, if they can provide us with 2 years history of their income. And in addition to that, we can consider a full range of additional incomes, such as tax credits and income from pensions, etc. Perhaps the most important part of our criteria is the financial assessment that we carry out. Like a lot of mortgage lenders, we utilize a credit reference agency called Experian. Essentially, Experian will carry out a check on your file, your credit footprint. It will look at things such as how much debt you have in total, how much you're paying to service that debt each month, and whether you have any adverse credit noted on your credit file. Some of the main things to highlight here are that we can't support applications where a customer has had a payday loan or a home credit loan within the 12-month period immediately prior to their application being submitted. And also, if you do have savings in excess of £13,000, we would expect you to use the amount above that threshold towards a deposit for the purchase of your home. Must apply jointly when wanting to live in a property that's purchased through co-ownership. With employment, we will take into consideration all types of employment, from temporary to fixed term. We will also support people who are self-employed as well, if they can provide us with 2 years history of their income. And in addition to that, we can consider a full range of additional incomes, such as tax credits and income from pensions, etc. Perhaps the most important part of our criteria is the financial assessment that we carry out. Like a lot of mortgage lenders, we utilize a credit reference agency called Experian. Essentially, Experian will carry out a check on your file, your credit footprint. It will look at things such as how much debt you have in total, how much you're paying to service that debt each month, and whether you have any adverse credit noted on your credit file. Some of the main things to highlight here are that we can't support applications where a customer has had a payday loan or a home credit loan within the 12-month period immediately prior to their application being submitted. And also, if you do have savings in excess of £13,000, we would expect you to use the amount above that threshold towards a deposit for the purchase of your home. So this slide really demonstrates the difference that co-ownership can make to our customers, both in terms of the initial cost of entry for home ownership and the ongoing costs. What we have here is an example of 3 tenures in the same property. So a typical home in Northern Ireland valued at about £150,000. At the top of the screen, we have a person that is renting that home. They will typically pay a rent at the minute of about £825 a month. They will generally only have a 12-month tenancy agreement. And long term, they won't really have a lot of security of tenure. And certainly when renting privately, they wouldn't have the option in most cases to put their own stamp on the home, things like redecoration, etc. The person at the bottom of the screen here who is purchasing this home with a traditional mortgage typically will require a deposit between 5 and 10%. In this example, £7,500 at 5% deposit. They would also need then to have the affordability to borrow for the mortgage, which in this case, £142,500. And their monthly payment, based on a 30-year term and an 8% rate of interest, is just over £1,000 a month. The person that's co-owning then in the middle has a big advantage straight away. First of all, they may not need a deposit to purchase their home because co-ownership works with a panel of various mortgage lenders. Several of the lenders that we work with offer our customers zero deposit mortgage options. So in this example, our customer has purchased their home with no deposit. And also because they only need to purchase a share of equity in the home, minimum share being 50%, they only need to borrow, in this case, £75,000. So there's significantly less money to be borrowed by this customer. What that means is that in addition to having no lump sum payment up front, they will have a much lower monthly payment to live in this home. In this example, £706 per month, and that consists of two payments. Their mortgage payment based on their £75,000 mortgage would be £550 per month. Again, that's based on a 30-year term and an 8% interest rate. And the rent that they would pay to co-ownership for the share of equity that we would own in the home, the other 50%, is £156 per month. So you can see there that co-ownership really does make a huge difference to our customers in terms of the not only the initial cost of entry, but also the ongoing costs when living in a home. So why do our customers choose co-ownership? There are a number of reasons, and perhaps the most common reason that people come to us is because co-ownership is a great way to access a home without the need for a deposit. We work with a panel of lenders, and those lenders will offer various mortgage products tailored towards co-ownership customers. Some of our customers can avail of deposit-free mortgages. There are also mortgage deals available where customers may only require a 5% deposit based on the equity share that they're purchasing in the home rather than the full value of the home. So it's a great way of reducing the initial lump sum required to buy a home. We will also provide for our customers over 45 years of experience in buying homes. We've purchased a huge amount of homes throughout our time and support a lot of customers. So we're very good at the home buying process, and the property assessment that our surveyors carry out ensures that our customers are buying quality homes that don't require huge amounts of work. And one of the final things then to mention is that our customers have a lot of flexibility when they purchase a home with co-ownership to purchase additional equity in the home or to buy back the entire equity that we own in their home to move into becoming full homeowners. And that's very attractive for a lot of the customers that we support. So before you start your co-ownership journey, here are some tips. Firstly, check your credit report. If you haven't yet done so, understand how much debt you have, how much you're paying to service your debt every month, and also, very importantly, understand if you have any adverse credit you're maybe not aware of. And you can do that by using an Experian check or another credit reference bureau to have a look at your financial footprint. Also, please visit our website, have a look at the co-ownership website, and check your eligibility, use the online tools that we have and understand what your affordability is as well. And of course, seek some professional advice. Speak with a financial advisor or go directly to a bank or building society and do a review of your finances to understand if you will qualify for a mortgage, and if so, how much of a mortgage can you expect to be able to actually qualify for. You can also build your understanding of what it takes to become a homeowner by visiting our micro site, stepstobuy.ni.com. And there's lots of really useful information on there that can help you in your home purchasing journey. And finally, get in contact with us. If you do have any questions or queries, or there's something that you just feel like you need to speak to somebody about, you can speak with a member of the co-ownership team on the telephone number here on the screen. You can send us an email, or if you like, you can call in to our office here in Belfast City Centre.